Today is Sunday, March 16th, and this is another update on my progress of beating the S&P 500 along with Bill Ackman's Pershing Square holdings. I do make these videos every Sunday and Tuesday, so if you want to follow along, hit that subscribe button and let's get into it. I'll show the SPY chart coming up, but since my last update, I did decide to increase all of my positions by 5%. The SPY price continued to fall, and it did eventually reach a level I felt comfortable adding to these positions. Last week, all of the events came in better than expected. On Tuesday, the job openings came in at 7.7 million versus the expected 7.6, which shows that there is still a stronger demand than anticipated for jobs. The CPI and the core CPI both came in at 0.2% when the street was expecting 0.3, which puts the CPI year over year at 2.8% versus the expected 2.9, and then the core CPI year over year is 3.1% versus the expected 3.2. On Thursday, initial jobless claims came in better than expected at only 220,000 versus the expected 225, and then the PPI came in flat when the street was expecting a 0.3% increase, and the core PPI came in at 0.2 versus 0.3, so definitely better than expected. If these had gone the other way, the markets could have definitely continued their slide downward. And then for this week, on Monday, we're going to have US retail sales. On Wednesday, we're going to have the Federal Reserve rate decision. And then on Thursday, we're going to finish it off with initial jobless claims and then existing home sales. If we take a look at the CME Group's FedWatch Outlook tool, you'll see that there's a 99% chance that the rates remain the same for this March meeting. If we take a look at the following meeting, which is going to be May 7th, right now there's a 74.1% chance that everything is going to stay the same. And there's only a 25.6% chance that there's going to be a rate cut. And it's not until the third meeting, which is going to be June 18th, that we see a realistic chance for a rate cut. Right now at that meeting, it stands at a 59.4% chance. So I highly doubt that anything is going to come in this March meeting. He's probably going to say what he's been saying, which is that the Federal Reserve isn't in any rush to cut the rates, and that he's going to continue watching the data points which reflect which direction the inflation's going. If we take a look at the SPY chart, you'll see that the SPY price closed above the 5-day moving average for the first time since this entire downtrend started. There was 3 separate times during this downtrend that the SPY price tried to close above the 5-day, but it ultimately got rejected every time and moved lower the next day. So it's definitely an encouraging sign that the SPY price was able to close above it. So as long as the price can stay above the 5-day, the next thing that I'm going to be looking for is for the SPY price to get above the 15, which definitely isn't going to happen all in one trading session for the fact that the 15-day represents a longer time period. In theory, I suppose it's possible. It would only be a 2.04% gain to do that. But for this week, as long as we can maintain staying above the 5-day moving average and then getting above this longer term green trend line would definitely lead me to believe that the downturn is over and that we're going to be in for another bull market soon. If you take a look at where the RSI chart was during the most recent bottom for the SPY price, you'll see that it momentarily dipped below 30, which is considered oversold. So for the entire S&P 500 to be in oversold territory, that's a perfect position for buyers to step back in, which is exactly what I think is going to happen over the next week, which is going to lead to the bull run. So again, what I'm looking for this week is the SPY price to stay above the 5-day and then get above this longer term trend line. These are going to be all 14 of my current positions. Right now, Meta, Nvidia, Microsoft, PayPal, and Costco make out my top 5, and those account for 55.3% of my portfolio. With adding the 5% to each position, that now puts me at 94.92% invested, which leaves me only with 5.08% sitting in cash. I don't intend on increasing any of my position sizes this week and plan on leaving the 5% sitting in cash. Since my last update, my portfolio had a decline of 0.34%. Pershing Square had a loss of 7.4%, and the S&P 500 had a loss of 2.27, which brings us year to date. My portfolio is at a loss of 1.91. Pershing Square has a loss of 2.17, and the S&P 500 has a loss of 3.91. That's going to do it for today. I do make these videos every Sunday and Tuesday, so if you want to follow along, hit that subscribe button, and I'll catch you on Tuesday.